The video you guys are about to watch is of me and my strategy recorded yesterday. I'm recording this today and doing a little bit of an intro because today I actually passed my eval. So there's a little bit of evidence that this strategy actually does work. But other than that, please make sure you have some notes, whether you're typing them out, writing them out, whatever. Just make sure to not let this sauce slip by. Enjoy the video, guys. All right, what's up, YouTube? Today, unfortunately, the Amazon Web Services servers are down. So there's no trading. We unfortunately cannot pass the account today. You guys see that it is 7:59 a.m. and New York market opens at 7:30. I can literally not trade today. It's not even letting me open up AlphaTick's platform with Project X. So this is what we're doing today. I'm going to teach you guys a little bit about my strategy, everything that I use. We're going to break it down in a 9-step plan for everything that I look for. What's up, YouTube? JJ says, what's up, YouTube? I'm sorry, what? Yes, let's go. Wait, he plays R6 and RL? Yes, bro. I do. My 2 favorite games. Let's go. Emza, F YouTube. Oh, no. Okay, well, we're going to go over our entry model. So I'm just going to type out the 9-step plan first, and then I'll show you guys examples. All right, so number 1, what I look for. Number 1, what I look for is a high time frame bias. So this is where I do my high time frame analysis. And for this, I go to analysis. And for this, I go to the weekly, the daily, the 4-hour, and the 1-hour. Number 2, what I'm looking for is a high time frame SMT. SMT on the high time frame. And from that, I'll start at the 15-minute, then work my way up to the 1-hour, then the 4-hour, then sometimes even the daily. Number 3, what I look for, starting at the 15-minute, and this is kind of the easiest that I do, is I look for session highs, and lows. This is on the Asia and London sessions. So I'll mark those out in blue and red lines. So you guys, that's when I go up and do this, right? So this would be an Asia session high, say for example, and then down here, maybe if it's a London session low, I'll mark it in blue. That's what you guys see on my charts when I have those blue and red lines marked out. All right, so number 4, I look for a 1-minute. And this is, I do this all in order. Exactly. You're a real G for doing this today, Wes. Dude, thank you, bro. What's up? So no trading today? No, sadly. Unfortunately, Project X just is not working. All the servers are down. 1 and 5-minute fair value gap / inverse fair value gap markings. So these are starting once New York session opens. All right, so I'm just going to type this out real quick, and then we are going to go through exactly what I would look for. We're gonna show you guys some examples as well. Number 5, what we're going to look for is some form of liquidity swept. So this can be an SMT. This can just be a regular form of liquidity sweep that we see on both ES and NQ. It does not have to be a SMT, but again, SMTs always kind of strengthen that bias. So some form of liquidity swept. Boom. Number 6. Oh, we got a, hold on here. We got number 5.5. That's right. I put a 5.5 in there. Low time frame SMT search. So what I mean when I say low time frame, regardless, just any time frame under the 15-minute. Mods on Alpha Futures Discord have closed chats on the whole server. Oh, probably, dude. Everyone's probably freaking out. Everyone's probably freaking out. So we're going to go below the 15-minute. Boom. Now number 6. Number 6, I'm looking for a displacement fair value gap from liquidity sweep or inverse from sweep. So displacement fair value gap resulting from a liquidity sweep. Oh my God, from a liquidity sweep. This can also be an inverse. Boom. 7. All right. Now, from that fair value gap, after we make that displacement fair value gap resulting from a liquidity sweep, we're going to look for wicking of CE of displacement fair value gap. What else do I have here? A good candle close for entry. This has to be in the same direction where it came from. And a good candle close for entry. This has to be in the same direction. This has to be in the same direction of where it came from. Spitting some free sauce here for you guys. Number 8. So this kind of helps us with targeting. Target internal highs and internal lows. Target closest internal high / low. Stops below or above the fair value gap / inverse fair value gap, or CE if the fair value gap / inverse fair value gap is a negative risk reward. Type that out. Stops below / above fair value gap, depending on which direction you're trading. Or CE if RR is negative. Perfect. That is literally my exact strategy in 9 steps for you guys. Oh, dang, thanks. $500 trading course? Bro, no. Dude, we're doing this for free, yo. No, I'm never going to open up a course. You guys can quote me on that. Never, ever going to run a course. Abso-fucking-lutely. Take a screenshot. I'll send this in. Where should I send it for now? We'll send it in my CE strategy real quick. Also, if you guys don't know, you can always see it here. Where are we? My CE entry model. Okay, but this is all of these steps are in my head as we are trading, as I'm looking for some form of trade. I'm going to sell a course to show them your vids. That's so funny. See, this is why he's the GOAT, bro. My GOAT from now on, you guys, bro. Everyone deserves to learn how to trade. Let's go through some examples. On the weekly, so what I look for with high time frame, with my high time frame bias, I'm seriously looking at like the last few candles. I'm not looking for anything crazy. You know, I'm looking at the last few candles. And I tell a lot of people this, don't be afraid to look at the line chart too, right? Because this really paints a good picture, shows us highs and lows, what we're doing exactly, especially on high time frames. Because we could see, right? Sometimes the chart, like it's easy to get a little bit confused, especially when you're seeing something like this. Like, yeah, our general direction's up, but you may be looking at this as a low and you're like, oh shit, we just made a lower low. We're bearish now, right? Take a look at the line chart. Maybe our lowest low is right here, right? Higher high, higher low, higher high, lower low, liquidity sweep. Oh shit. Higher time frame SMT possibly. I don't know. Let's take a look. And then I'll just work my way down. So now at the daily, we see a sweep here, see a pretty nice reaction. I always had my eye on this fair value gap here. Actually, I want this thing back above me. Here we go. Daily direction here. Let's take a look at the line chart again. Oh, damn, we made a lower low here. but we're starting to make higher highs again. These bullish, weekly bullish, daily bullish. 4 hour. Let's take a look at the 4 hour now, right? I would maybe mark out something like this imbalance that we see on the 4 hour. We're beating the shit out of it. Beautiful. Love to see that. I have a bullish bias today, right? That's what I would be looking at, right? I would have a bullish high time frame bias right now. And then I would just check the 1 hour for confirmation. Sweet. Now from there, right? We're going to go to our SMTs on the high time frame. So on the 15 minute, unfortunately, I can't really do it here, but on any Project X platforms, it's great. So if you guys see in the top right here, Trading View and all the Project X platforms have this. If you press on this layout setup, I always use this one. You guys can use that one if you want, but this is what I use for SMT searches. Unfortunately though, I don't have the Trading View Essential package, so I can't open up the two panels you can see, which is kind of shitty, but whatever. You guys have seen me do it a handful of times. Number 3, session highs and session lows. So we're going to go to the 15 minute, right? And then starting at 18. So this candle starting right here is where my Asia session starts. So this candle is the lowest point at the Asia session. So I'm going to go here, mark out this in red for Asia. Sweet. My Asia session ends at 3, right? Perfect. Okay, there's no high that beats out what we're doing right now. So I would then go to my London session, which starts at 1. So this candle right here, no highs to mark out because all the highs are already taken. So we can mark out this London session low over here. Mark that out. Mark it in blue. Very nice. Sweet. Boom. Where are we here? Let's grab this. Awesome. So number 1, number 2, number 3 done. And this should all be done before session opens. Great. Yo, can't even trade. What's up, J-Way? Twiddling my thumbs. It's 2 a.m. over there. Bro, J-Way's for sure Batman. Master Bruce, you should get some rest. Gotham needs me. Press here and add MES to change candles. Let's go. Wes literally taught me how to calculate size of your trades. Now I'm funded. That's why I'm his GOAT. Yo, let's go. Yo, I just got out for about 10 minis. Hope I sized it right. That's funny. All right, now number 4. What I'm going to look for, the 1 minute and 5 minute fair value gap and inverse fair value gap markings once New York market opens. So we're going to pretend that the New York market, right? Here's our opening in the New York market. So as soon as we see this, we're going to mark out seriously every fair value gap that we see, big or small. Size does not matter when it comes to fair value gaps. So mark out these. There's no other fair value gaps to mark out today. A little bit of chop. We're also going to take a look at the 5 minute. So we go to the 5. And recently, I've actually been doing my 5 minute fair value gaps a little bit different. I've actually only been marking out CE. So what I mean when I say that is I'll make a fair value gap marking, right? And then instead of just leaving the box on, I'll add this horizontal ray and I'll just bring it right up to CE. And then I'll just go like this, dash the line, turn it red for a CE marking. So now that I know, all right, the dashed line across is a 5 minute fair value gap CE marking, right? So that is all I do for that. Number 5, we're looking for some form of liquidity swept. So today's kind of a shitty example because there's not a whole lot happening in New York market right now. But say, for example, here, we sweep this liquidity, right? Say we sweep this liquidity and we make an imbalance to the downside. That's exactly what I want to see, right? Let's see if we do make an imbalance. Number 5, we're going to look for a low time frame SMT search. So again, unfortunately, I can't open it up, but that's what we're going to be looking for just on our low time frame. So 5 and the 1 minute is what I mean when I say that. Number 6, a displacement fair value gap resulting from liquidity sweep. So if we actually go to previous New York session, I'll show you guys. So there's some good examples here. Right here. Let's go to the 1 minute. Previous New York market open. Right here. Previous New York market open. So again, we're going to be marking out all these fair value gaps and shit, right? So we're going to be following it, right? Liquidity. Oh, this is a great example here, you guys. And this is why I love my strategy, because I need to see everything. I need to see absolutely everything in order for me to take a trade, right? I need to see the sweep. I need to see the imbalance made after the sweep, indicating that some form of orders were filled, right? Now we're going to continue heading in the direction. So we're going to look for the sweep, right? This imbalance is made after the sweep. So all I literally needed for this day was a return to this imbalance, a wick off CE and a good candle close, and I would have entered, right? But fortunately, I don't see that. I don't see that. Okay, that's cooked. Well, yeah. Imbalance made. Sweep. Let's look for a good entry here. Love my entry model because it's so stubborn. Okay, this is the trade that we took on Friday, actually. This is the exact trade we took on Friday. So here, this is a great one. So this one was actually a little bit tough because I actually didn't follow my high time frame bias. And this is what I mean when you got to let your candles kind of show you what they want to do, right? If you're seeing a lot of volume in like candles in a short amount of time, like these are full sell candles as soon as we sweat this high, right? We can see this sweep on the high. We can mark out like inverse fair value gaps and stuff. I believe I entered on this one right here, right? We had a good candle close. I believe, yes, I entered right here and I trailed my stops. Stops up here, stops below, boom. That is a decent trade right there. All right, let's get my thing back. Displacement fair value gap resulting from a liquidity sweep. This can also be an inverse. We went over that. Number 7, wicking of CE of displacement fair value gap and a good candle close for entry. This has to be in the same direction where it came from. So we go back here. We see our good sweep. We see a imbalance made after the sweep, indicating that some form of sell orders were filled up here. We come back to CE. And I believe this looks different on Top Step X because we didn't even close past the CE marker. And then we had a good candle close. And then number 8, we're targeting internal lows. So that would just be this guy right here. And this is another thing I use for my strategy. I only trail my stops for shorts because you're never going to see anyone panic buy in the market, but you are going to see people panic sell in the market, if that makes sense. So if there were like a flash crash, I would be able to catch that. But if there was some news that came out and caused like institutions to buy and send it to the moon, there's really nothing we can do about that, right? We want to play like the emotion of the retail trader because all institutions, maybe not all, but a lot of institutions and like brokers, investment firms, whatever, they need capital from retail traders. Like they're trusted to trade for them, right? That's what, like, a lot of people go to like an investment advisor and they'll throw their money in a, say, for example, like they throw $1,000 into the NASDAQ, right? As soon as they start seeing it going down, they're going to be like, damn, like I got to pull out my profits now before it goes back down to zero. You know what I mean? Like that happens a lot more than, holy shit, we're skyrocketing to the moon. I'm going to take it out while I'm up. No, right? That's just the gambling in like human nature. When you see something going good, you want to see it continue to do good, right? All right. But yeah, the entry, right? We get a good candle close. We're going to target internal lows while stops being above the high or above the fair value gap, or CE if you have a negative risk reward. And that is literally it, you guys. My entry model, my high time frame model is so simple. It's broken down into 9 steps. If you guys want, you guys can go back and look at some of the YouTube videos because I trade the exact same way every single time. So let's go through here. I kind of just talk about price and shit for a while. Okay, now I get started. So I'm looking at weekly price action, bullish, daily price action, bearish, because we were in a daily fair value gap. Right. 4-hour price action. Do I get there ever? Okay, I'm here right now. I'm pretty sure we're bearish on this as well. Yep, bearish. Sweet. 1-hour price action. Neutral. Okay, that's one more thing I want to talk about. I am not afraid to have a neutral bias. Like, say for example, we're kind of just ranging and we're in a little bit of a chop state and we don't really have a bias until we break a significant low or significant high. You don't have to be set on a bias right away, right? Step B or step 1. Yeah. Yes, sir. Okay, anyway, session liquidity done. So that's our London session low here, our London session high, and our Asian session high. Sweet, done. Nice. Okay. Oh, yeah, I'm freaking out. Nice. All right, now looking for entries here. So the market is open, right? It's 7:33. You guys can see that in the bottom left. The market's been open for 3 minutes. I'm going to mark out my fair value gaps that I see. Boom, fair value gap 1. Why I don't take an entry here, right? We got to remember we need a low time frame SMT as well. And we also don't have a high time frame SMT yet. Okay, keep that in mind. We take out London high here. And I believe if I open up this double chart, I don't think MES takes the high. Okay, hold on. Here we are. So MES actually takes both London and Asia session. MNQ only takes London session. Look at the displacement for value gap that we make here. Hold on. Let's see if we can get this out of the way. Right here, right behind. Displacement for value gap, displacement for value gap. Look at these. If it would have returned to this displacement for value gap and wick CE and had a good candle close, boom, entry. Oh, here. Great example. Displacement for value gap again. We come up, wick CE. Do we enter here? I don't enter here because I wait for a candle close every time. Right? What time do you stop trading? If I'm going to be honest, kind of whenever I feel like, but I don't really trade past 10 a.m. a lot of the time because I like to just be in and out. Holy shit, price went to the moon there. Oh, we're watching Trump. All right, we're taking more highs. So that's that liquidity sweep that we're looking for. Make a displacement for a value gap up here. So I believe we took a 15-minute high prior in this price action. So keep that in mind. All of our session liquidity is swept to the upside. So I'm looking to possibly continue in a short. Another sweep here. Funniest stream so far. Okay, here's what we're looking for. This is nice. I like where we're at here. That fucking picture's crazy. Okay. Oh, you need a low time frame or internal SMT for you to take the trade, Wes? I did not know that. Yes, that is correct. I need a high time frame and a low time frame SMT. If not a low time frame SMT, at least a low time frame liquidity sweep. Correct me if I'm wrong, but if candle wicks past the whole fair value gap, you won't enter off of it, correct? Yes and no. So if it wicks through like a whole fair value gap and then doesn't get a good candle close through CE, I'll think of entering, right? It kind of depending on what the chart's doing. If we're having like a major dump and then it wicks through CE of a bearish fair value gap and doesn't get a good candle close through CE, and then the second candle gets a good close, I will enter off that. Consider it. Yes, that's right. That's the word I was looking for. All right, so here. Yeah, rebalances. Okay, this is one thing. This entry model seriously needs a whole lot of patience, you guys. Like, you're not going to see an entry every fucking 5 minutes, okay? You got to wait for it to come to you. So I'm marking out seriously every single fucking imbalance that I'm seeing. Do I take an entry here right away? Oh yeah. Okay, so this is a good, okay, so this is exactly what you were talking about, Zflex. So right here, it wicks past CE, almost wicks past the whole fair value gap, right? We get like a candle close at CE, and then the following candle gets a close below the fair value gap. I enter based off that because we have our high time frame session liquidity swept, right? We have a low time frame sweep of this high, and we displace back to the downside. This fair value gap is a inverse fair value gap from before. Get a good candle close, stops above the high, target internal lows, and I trail my stops because it's a short. Because it's a short. The rune says, why didn't you enter off the first wick in CE and the candle close? Great question. So we were going through this live as well. So this one you're talking about here, right? This one right here. Okay. So for me to enter, I need, so let's go back here. So for me to enter, so say for example, there was a, oh, this one's a good example right here. So there's a fair value gap right here, right? We come wick CE, and then our candle close ends up being way up here, right? Our target is this internal high. So if we get a negative risk reward, or it just blows past our target after wicking CE, that's just, yeah, it needs to be at least a 1-to-1. That's right. That's right. That's right. All right, let's get back to it. Yeah, so this was a pretty decent trade. I was on fire with this one. Nasty trail stop. And I passed the account, but didn't even see it. Like, look at that, you guys. It actually touches 53 twice. Touches 53 twice. Do that. 53, 53, 53. Yep. Bro, get real. That was so close. But that is literally like, I try to keep it so simple because it helps me out so much when I have less to think about. Like, you guys, overloading your brain is actually like, it's shitty.